How many of you have been looking forward to the class tonight? I'm seeing me. Yes, let's do this. Cool. Well, I want to welcome everybody tonight out to class Picking Better Entries and Exits. You know, we've had a lot of requests to do a class on this, so we went and did it. So we're going to get started, but before we do, I need to give everybody a disclaimer just to let you know that I'm not a broker, I'm not a financial advisor. I do not have a license to give you specific financial advice. That's not my purpose in being here. My single, sole, and only purpose in this and every workshop that I do is to provide you, the student, with education that is general in nature and is not tailored to any specific individual, even if I was to use your name in the course of this workshop. Also understand that from time to time we will use examples of real-time unfunded paper trades as a way to highlight, illustrate, and demonstrate the strategies I'll be sharing with you. Now, with the disclaimer out of the way, we're going to go over the schedule for tonight. And we had our disclaimer. Talking about our schedule now. Then we're going to have a motivational quote because I think motivation is a huge part in trading, and it's what a lot of us need every day. Then we're going to talk a little bit about me briefly because we've had a lot of people that are new and may not know at all who's teaching them tonight. So I think that's another important thing. And then we're going to talk about why picking better entries and exits is important in your trading. How many of you think having better entries and exits is important? Me, yes, good. So we're going to talk about that. Then we're going to go over some examples of both good entries and exits and bad entries and exits because we want to be able to show you guys the difference between them both. Then we're also going to go in and put on a trade because you're going to learn it. Why not go in and implement it? And then, of course, we're going to go over a little bit of your Market My Report news. And then during the whole session, we're going to have open Q&A. So question and answer, just type them right in the text box. And our motivational quote for tonight is, sometimes you just need 20 seconds of insane courage. This is personally one of my favorite quotes, and is just right on with what we're doing in trading. How many of you agree with that? Yes, cool. So, we're going to talk just briefly about me. So, I'm 13 years old and in 7th grade, and I've been trading for about 4 years now. I really like doing it. And I trade both basic strategies and advanced strategies. I trade calls and puts, and then I also trade butterflies and other stuff. So, I'm all across the board doing stuff. I like hanging out with my friends and family, and I love to go hunting. So, big question a lot of you are asking yourself, why is picking better entries and exits important? Well, in my opinion, it can make or break your trading. How many of you agree with that? I see agree. Yes, yeah. Check. So when you pick better entries and exits, you can become more profitable and have smaller losses. I don't know about you guys, but I know I sure like more profit and less losses. Profit's always nice. And when you're not looking at your entries and exits, you're not really fully setting up your trades, because how would you like it if someone just went in and set everything up? You had no idea what was going on. You're not really fully setting up what your trade is. And just entries and exits are a major part of your trading. It's how you're getting into and getting out of your trades. It's when you're buying and selling for a profit or selling for a loss. But how do I know if I'm picking good or bad entries and exits? Well, let's look at some examples. So this one was on Priceline. These are all past unfunded trades. So this was a good entry and exit we had. As you can see, I entered 20 contracts of the May 15 175 call at 48.70. You can see I entered right here on this wick. So my first exit was the next day, and I sold my option at 60.80. That's from 47 to 60 in one day. How many of you would like to make a profit like that in one day? Nice. Yes, that sounds good to me. Yes. But that's only your first exit. Remember, we had 20 contracts. So our first one was we got into 20. We sold 10. Now what do? We sold 5. So we exited 5 more contracts at 69.60. So remember, we got in here. We got into 20 contracts here, sold 10 here, and exited 5 more here at 69.60. That's still good. And remember, we still have 5 more contracts left. Les says, I'd like to be able to afford a 48.60 option. Well, Skip, I think a lot of us want to do that. And when you're trading good and having good entries and exits, that definitely can be possible. So on the second exit, look at that's 69.60. That's almost 20 points above where we entered on the option. That's good. Now, some of you might be saying, yeah, it's a Priceline option. Sometimes they do move more. It's just the stock that presented a good one. So here's our third and final exit. We exited our last 5 contracts here at $83, and we made a total profit of $39,621 in under 2 weeks in trading days. How many of you would like to make that much profit in 2 weeks? I'm seeing yes. Judy says, oh, I could live on that. Oh, yeah, I think a lot of people would like that. That's 2 weeks. Now, you might be saying, well, how do I know if I'm going to be able to do that? That sure seems like a lot of money to go put that on. Yes, it is, but when you're taking the time and learning how to do this, you'll be able to get up there and earn the money and be able to put on trades like that and make $39,000 profit in just 2 weeks. Now, here's another stock, UAL. This is United Airlines. And remember, these are all past trades, so I'm not in any of these. And this here was a good entry. We entered 10 contracts of the May 15 62.5 put at 480. And yes, we did get in on the wick here, expected for a put. Now, we had a good entry, but we had a bad exit. This is what happens a lot. So we got stopped out of our other 10 contracts at 410. Yes, it's only a $700 loss, but that's still a loss. And if you look, yeah, it did go up, and some of you may say, well, that looks like where I would have got out. But to me, I still would have been able to maybe make a little bit of profit if I waited when it came down here, because how many of you are noticing you get stopped out on a wick or exit on a wick? Judy says, I hate getting stopped out on a wick. I got that same feeling, Judy. I know a lot of traders, they hate it. So that was only a $700 loss on a bad exit. How would you like it if that $700 loss was only when you had a bad exit? How would you like it if when you had a bad exit, your losses were less than $500? You know, some of you may be saying, well, you could be putting really tight stops or something. I personally don't use tight stops. It's just my trading style. It all depends on you looking at the chart and picking those good entries and exits. So here, we're going to do another good example of Allegiant. This was a good entry and a good exit. So some of you might be saying, just looking at this, wow, I think you missed the move. But if you see here, we entered 10 contracts. The May 15 180 put at 970. And this was a break below the previous day's candle. And we stayed in it. And that stock ended up having over a 15% sell-off that day. And our exit, we exited 10 contracts the next day at 1660 in 2 trading days. That's over a $5,000 profit on a good entry and a good exit. Do you see how having good entries and good exits can majorly help your trading? I'm seeing a lot of yeses. I'd love profit like that. Now, let's look at a few more examples. So here was BWLD. I just call it BWild. This is Buffalo Wild Wings. So we entered 10 contracts of the June 15 190 put at 1910. Yes, it was a more high-priced option, but this is paper, so you can do that, and you can get a little bit out of your comfort zone and experiment with a higher priced option. So we entered at the wick. This was for a put trade, but then what happened? We had a bad exit and then got stopped out on a wick above the 100 the next day. And as you can see, it closed below it and then had a sell-off the next day. Les is saying $19,100 for a trade. Is that realistic trading? Well, Skip, some people might say yes, some people might say no. It's just all depending on how much capital you have. Most people, yeah, you're probably not going to be able to afford a $20,000 trade, but why not be able to experiment and do that in your paper trading so that when you've done enough real trades and made that profit, you're comfortable with trading high-priced options and you know, okay, this is how I'm going to trade it and I've traded these before, so it's not something super new to you and you're worried about it. Diane says, are these directional trades? Most of these are yes, because they're easier for entries and exits versus doing butterflies and more advanced strategies. Because I don't want to blow any of you guys away, because you know all kinds of people here have different trading styles. And I mean, believe me, you guys, it only says our name, but there's over 15 people here. So that's really a good thing. So trust me, there's definitely all kinds of traders. So yes, in my opinion, this was a bad exit and you could have made more money here. And some people might say, well, Grant, you have no idea if that stock was going to do that the next day or not. Correct, we didn't. But we've got 10 contracts. We can wait and see. And because we got out on a bad exit and our spread was big, we ended up losing over 4,000. Now, yes, we made 5,000 the other week and 40,000 another time. So I think a $5,000 loss, yeah, it's big for most people, but you still have money and you need to learn. And remember, not every trade's a winning trade. So we had a bad exit off wick. And this is happening too often to many, many traders. Does this ever happen to you guys? I'm seeing yes, yes, yes. I hate it. Yeah, it just bugs me. And a lot of people, wicks are just almost like your trading nemesis. But A lot of people ask, how do I fix this problem? I don't know if that's going to be the high or the low of the day. How do I know? Well, one thing I've learned from a lot of people is that you need to look at the daily chart. The daily chart is important, and a lot of higher traders, like higher as I mean, they've got a lot of money and are doing this. They're going in, and before they get into an intraday trade, they're looking at the daily chart. Because maybe say a stock like Amazon is going up intraday, and on their daily chart, they're below their 200 moving average, which is a major moving average, and they're sure in a mighty sell-off, but you haven't looked at their daily chart, and you buy calls, and the next day you wonder why you're down a couple grand. Well, when you're looking at the daily chart, you can know and say, okay, I don't think this is a good time to enter that right now, because it is not doing what the daily chart is telling me it's going to do. So we have looked at some examples, and we've looked at both good and bad entries and exits. Now, what did you guys get from those examples? I said, Judy says entries are important. Scott says important to trade right to maximize profit. Yes, I'm glad you guys are learning. That's the important part, because when you get these down, you're really able to grasp how everything else is just going to work. But don't worry, not every trade was gonna be a great entry and exit. No one's perfect. Yeah, if you take a lot of time, you're going to be able to do good, but nobody's perfect. Not every single trade is going to be a great trade. So don't hurt yourself or beat yourself down when, yeah, you do have a bad exit and you lose a little more than you want. It's going to happen. So, enough talking about this. Why don't we go on and put on a trade? How many of you want to do that? Let's do it. Yes, yes. That's the enthusiasm I like in here. So if you guys can let me know if you're seeing extreme charts. Yes, cool. Just wanted to make sure. So before we had class, I went through and found a couple, so we wouldn't spend all our time in here trying to find trades and never get to go put them on. And I've tried to get a range of stocks for everybody. So some of you who maybe are the more advanced trader and are trading with bigger stocks, say like the Googles, the Amazon, the Priceline, yeah, we got some little more expensive. And then we got some of you more beginner or just trading with the cheaper price stocks, some ones that aren't as high priced, like less than a couple $100. So one of these I found was Apple. And Apple I really liked for an entry below the 100 moving average. How many of you guys like that trade? Judy says, yes, sounds like a great trade. Cool. So we have some good trades that we're going to go through here. I'm saying Apple from you guys is a yes. Now this would be below the 100, but what we're just browsing over these first, and then we're gonna go through and fully set them up and talk about them. So don't worry, we're not just gonna scan over them and not do anything with them. Another one I found was Disney. I'm pretty sure most of you guys have heard of Walt Disney, and I was really liking them for an entry below the 50 moving average. Now, some of you might be saying, well, Grant, there's a 20 moving average right there. Why not get in and be able to make more money? Do you see what's happened the last couple times it's been at the 20? Oh, a bounce here, a bunch of consolidation. Bounce, bounce, bounce. I want to make sure that it's able to break down below that 20 and stay down before I get in. Les says, is this a call entry or put entry? The way I'm looking at it, Les, I'd put Disney for a put entry below the 50 moving average. How many of you guys like that trade? Yes, seems fair, sounds good. Yeah, remember, this is a class of participation. Now, Les says it depends on volume. Well, yes, it does, but look at Disney has close to 10 million in volume. Is that enough for you? So, the next one that we liked, and I tried to steer away, just so you guys know, I steered away from any drug companies or subsectors or anything else, only because I really don't like to trade subsectors and drug companies. A good mentor of mine always says, don't do drugs, and she means both drugs and drug stocks. So I always just try to steer away from those, and subsectors can just be so choppy. So this one I like for probably a little bit longer term, and for me, longer term is probably a month or so, only because I'm doing many intraday strategies, so longer is different. Now, long term can vary for any trader. For some people, long term could be a couple weeks maybe, or others could be months and even years. It all depends on your trading style. So some of you might be saying, well, Grant, I sure don't trade a bunch of intraday. I'm longer. That's totally okay. So I liked Melly here for another put candidate. Now, most of these you're going to see are a put candidate, and I'm not trying to steer away from doing calls or anything, but what has the market done the last 2 days? Puts, bearish. Yesterday, the S&P had a sell-off of 25 points. Today, it closed down 10, but was down 20. So what do you think most traders are going to be looking at most likely? Bearish. Personally, I don't see many traders when the S&P is down 25 points looking for calls. So that's why you're going to see a lot of these stocks as we're going through bearish trades. So Melly here, which does internet, this is not a drug company or something, was a good put trade. And you can see they've been on a run up here. Oh, but they did have earnings today. How many of you in here are earnings traders, like to trade over earnings or do post-earnings trades? I'm seeing a couple Sures. I'm seeing some both. One not me. That's okay. It's all your trading style. Now for this one, because it was earnings today, I'm going to talk to those of you real quick that have that trade the earnings. Now Judy says no, I would have to practice them. Maybe a future class. Huh. That's interesting. Yes, we'd have to think about that. So this has earnings today. Now I do some earnings, but I'm not super advanced in earnings. So this for now is going to be one to watch for me. For my entry for puts would be below the 10 moving average here, because then that would really start kind of your rollover into this bearish sell-off here, and there's really a good chunk of time to have your stock break down and make the profit, because look, it's $148 stock and it's a $3.80 average range, which is how much it moves on average over the last 13 days. That's my setting. So that's pretty good. So there's definitely some potential to earn money here. Now, yes, it was earnings today, and say the stock does gap down, yeah, okay, we're not going to do it. But at least we stayed out and followed the rules. So MELE is just going to be one to watch for now. Then the next one is PXD. This is a gas, oil and gas. Oh, Les says, we're going back to MELE here. Why not the bottom of the previous bullish candle being engulfed? Skip, are you saying on the 5th or on the 6th? Or I'm sorry, Les, are you saying on the 5th or on the 6th? Look, okay, this bullish candle. So, yes, that could be our entry, but the reason I don't feel comfortable doing that is because we could end up entering on a wick. Say earnings are good, you have a good trading day tomorrow, and it comes down, gets a wick, and bounces up. Who wants to have that happen? And then you could lose money. You could get into your put, and then what happens? You have a bounce and a takeoff off of earnings news. So for me, that's why it wouldn't be my entry. Now, again, we all trade differently. So if that's what you want to do and you've got your plan set, then you can do that. But I wouldn't, only because I wouldn't feel comfortable doing that trade. So PXD, this is at oil and gas. We're looking at, again, another bearish play on a break below the 100 moving average. How many of you are liking this one for a bearish and using the 100 moving average as your entry? Now, earnings were yesterday, but as you can see, for me, I'd still be comfortable trading this because normally, yeah, you have a sell-off or a run-up on the earnings day, and then you get the gap either way. But then the next trading day, you just have that huge gap doing something, and this really didn't do anything. And to me, it's still looking bearish if on your earnings day we had a little bit of a sell-off. That was a, hold on here. That was a 5-point sell-off on earnings. That's pretty good for a $160 stock. So that's kind of telling me this still looks bearish even though it's after earnings. How many of you would like to go in and possibly set up a trade on PXD? Now Scott says it looks interesting. I'd want it to break through and then retrace and go down. So yes, you could wait for a test, and that's the thing we definitely want to do. If it breaks below it tomorrow, I'm definitely going to want to watch it in the daily chart, watch your price, and make sure it can stay below that 100 moving average, because we don't want to end up getting in on a wick or something. So how many of you like PXD? Do you want to trade this one to set up a trade? Judy says, yes, that would be a good example. Yes, please. Yes, cool. We're going to go through and set this one up after. We've got just 3 more, and then we're going to go through, fully set everything up, create some real life examples for you guys, and show you how we can pick better entries and exits and help your trading. So Sherwin-Williams, the paint company, I'm sure most of you guys have heard of them. This is another bearish play, and you can see it was in a channel here for about 2 months total, and we just started to have this breakdown. Again, this is a little higher price stock, but we're going to go through and check your options and make sure everything is all good. So we're looking at a bearish play, most likely if it can break a little bit below today's candle. Yes, it did have a little bit of a tweezer bottom here, but it's really, if it can break below the sign, and it didn't, it closed most of the way below the 100 moving average, so that's still showing a bearish sign to me. So we're gonna have to pick entry, and we'll definitely do that with you guys. But how many of you guys want to set up a put trade on Sherwin-Williams? Yes, yes, yes. Cool. We've definitely got some good trades here. And yes, Les is agreeing. A put on SHW. And then our last one that we wanted to go through with you guys is Zimmer Holdings. Yes, they did have a gap down, but look at what they're at. What's this moving average right here? Do any of you guys know? The 200, yes, this is the 200 moving average, and this is definitely a major 200 moving average. So it gapped right down to it. Yes, it's had some wicks, but in my opinion, if we can get a break below the wick it had on the initial gap, I'd feel comfortable getting into a put trade on ZMH. How many of you guys like this for another put candidate? Yeah, Les says nice. Okay, so we've got 5 trading candidates for that we're going to go set up and put some good entries and put another good exit in for trading. So we have Apple, Disney, PXD, SHW, and ZMH. Well, let me bring up my trading here. Oh, second. One moment, I'm just bringing something up here so we can go through and set up our trade. Option chains, cool. Now this time, yes, I will be using Options Express option chains only because I'm trading using Options Express platform, so it's just a little easier for me to go set it up, and it'll still have our open interest and delta and everything else. So the first one that you guys all wanted to look at was Apple. So let me put it in here. AAPL. Let me bring up their chart. There we go. So we had a put trade below the 100 moving average. So let's see. So here's Apple options. Now we wouldn't really do a May option because May options expire next week Friday. What are you guys thinking of? June option, or maybe even going out a little longer and holding on to this for a July option? Oh yeah, Judy, she's correct. She says, I like June, but July might be too expensive. Yes, you're definitely correct, and we're gonna go look at that and see what the whole price is going into it. Yes, Skip. June. He says June for puts. Yes, correct. This is a put trade on Apple. So let's go here on the actual option chain and go out to June. I'm going to scroll down because we're going to do the monthlies. So a put right now, you've got $1.38 by $1.41. That's a pretty good spread for Apple, only 3 cents. And you have 21,000 open interest. Is that enough open interest for you guys? Judy says, enough for me. Yeah, personally, I think if any action's got 20,000 open interest, it sure sounds like enough. Now that's your June. Let's just go out and check July. Skip says, what is delta? We're going to check that. Says, I'll take 10% of that. Yes, I agree. It looks like here your delta is only 18. Okay, so it's 18. You have a 3-cent spread, an option that's got over 20,000 open interest. Now, I'm sure most of you have traded Apple at least once or twice in the past month, and most of you know that Apple moves a good amount, so it's got 18 delta. Okay, on 10 contracts, is it really going to take you that long to start making profit with an 18 delta? Not really. So I still feel comfortable, even with the lower delta, putting on this trade. So that's for your Junes, and that's still not a bad spread at all for an Apple option. Now, what's your Julys here? We've got, the spread's not too bad at all either. 218 by 233. You've got a 22 delta. It's a little better, but again, your option is about $1 more expensive. So it really depends. It really depends what you guys want to do. So what kind of trade do you guys want to set up? Do you want to do a June option or a July option? And their July option has a 48,000 open interest, and that's really a lot of open interest on any option. What do you guys feel? June option or a July option? Diane says a June option, a tighter spread. Yes. Okay, I'm seeing a couple more Junes. Yeah, so it looks like you guys want to go with a June option. So this is the 115 put. And here's what I'm going to do. Options Express, you have contingents. So we're going to go through and set, well, what do you guys want to do? Do you guys want to set a contingent, or do you want to set an alert and know what your option is? Judy says, I like contingents. I have that JOB, so I can't always react on alerts. Yeah, I definitely know that people definitely have your JOB, and that you can't always manage your alerts. Now, I know some of you are saying, okay, yeah, you set a contingent, but then what happens if you get in on a wick? That's kind of your chance that you have to take with contingents, basically, because when you're doing these, unless you're setting it a lot farther down than your 100 moving average, you're really just going to have to use the alert. Now, Jason says, I like an alert. I can pull the trigger from a cell phone if I like it. Yes, now some trading platforms, you can definitely do that. I know it really varies what trading platform you're using. Judy says, do you ever use time contingents? That helps me. Yes, I have, but I definitely find if you're really focusing more and don't want to get on the wicks, yeah, it might be better to watch it. Okay, but let's go in and look here. Apple, do they really have super long wicks that you have to worry about? What do you guys think? I'm seeing not really, not too many bad wicks. So why not for Apple? We'll go through through and set up a contingent. Now, for some of the other stocks that we have, this may be different, but for this one, we know what we're going to do. So in Options Express, I'm just going to kind of walk you guys through how you set it up. So we have Apple. Now again, that was the June monthly 115 put. So as you can see here, it has over here the bid and ask, so you can just check your option, make sure that's the correct one. So we want to buy to open 10 contracts at market. Now, some of you might be going, but at market, their spreads could be really big at open. I've seen them intraday, and you don't have to worry about getting filled on a huge spread on Apple. So our trigger would be a price on Apple less than, let's see, what was the 100 moving average? It's 121.07, but if we want to make sure it's below, what do you guys feel about maybe like a 120.50 or so? I'm seeing some yeses. That sounds good. Yeah, and this, again, most likely this trade isn't going to be hit tomorrow. Why? Because normally Apple doesn't have a 5-point sell-off in a day. But that's okay. It's not all about come on, get the trade, let's go, let's do this, come on. Sometimes it takes the time, but if you take that time, then what happens? You have more time in order to make the profit. So we've got 120.50, and I actually like to use the timed feature on here. So we'll do from 10 to 4, good till cancel. So that way we won't get filled if say on Friday there's a gap down on Apple at open and they gap down to our entry price at 9:30. We can't get filled on that gap until it's 10 o'clock. So a lot of stocks such as Apple will gap down or up and then go in and fill that gap. I like to use it after 10, so if stocks have that gap, it normally gives them an opportunity to fill it, and I know I'm not getting another false entry, especially if I'm using contingents. So we're going to go through and preview our order. So it says, contingent upon Apple less than 120.50, good till cancel. So we're going to buy to open 10 of the Apple June 115 put. Now this does say contract size 100, but it says 100, but it's right. So at market, good for the day. And then this is our total price here, and we'll place order. Yes, markets are closed, so this will be placed tomorrow at open. But again, it won't actually if it hits the price till 10. And this is for any day. As you have it good till cancel, it'll do this every day, not just the first day you put it on. Cool. So we have sent that contingent in. Let's go back to our option chain here. And the next trade we had was Disney. This was a put trade below the 50. Do you guys remember this one? And again, we might have a trade here on a stock that looked good, but we're going to have to end up not doing it because your spread might be too big on an option. I've seen trades before where on a $1 option, you've got a 30-cent spread or a 40-cent spread. Personally, I don't like to trade it when it's that big. So Disney, this was a put option below 106.40. What do you guys feel? Do you want to go for a little bit longer term? Because you can see how long this uptrend has lasted. Do you guys feel a July pending if the option works good? Or do you want to do a June and it does go down and you just take your profit? Scott says go longer. What else? What do you guys feel? I'm seeing longer sounds good. July, longer, cool. So this is a put trade. Let's go out to July and look at those options. Wow, this really isn't bad for Disney. A 110 put, which is, oh, I'm sorry, the 105 put, because I like to use Bill's value menu strategy, which is below $2 and close to an in the money option. So it's only 177 by 182, a 5-cent spread. That sounds like a good spread to me, and you've got 2,600 open interest. That's definitely a good option, and like Judy says, yes, a nice small spread. So we've got the Disney 105 put. Do you guys want to go through and set another contingent up on this, or do you guys want to set an alert? Again, I'm trying to let you guys kind of steer how we're doing stuff, because you guys are a lot of the people that are working on this. I'm seeing alert on this one. So let's go through and set an alert in Options Express. Yes, I'm sorry, not all of you guys use it, but it's just the platform that I'm using. So let me bring up alerts here, if you can bear with me for one moment. So in here we have, oh, whoops. So here is our alerts. So this is Disney. So we're going to put in here DIS. And we're going to click go and come up. Les says, is this class recorded? Yes, Les, this class is. And the video of it should be posted on our Facebook sometime this weekend. So again, this is in Options Express, how we are setting the alerts in here. So we're going to do price, and you don't have to click the check box, because when you type it in here, it'll just automatically check it for you. So we want to have a put option below 106.40. That's your 50 moving average. But I'm again going to put it probably down at about 106.1. So that way we can make sure it's down and we're not just getting in on a wick. So last below 106.01. And you might say, well, why not just do it 106? I don't like it to be the straight number. It's just better for me, and I find I've gotten definitely more trades triggered not using a flat number and having an extra number on the side. So as we're just going to go in here, click Save Changes, and you can see it checked the price box, and then that alert is in here. So here you can see Disney, and this P is a price alert. So that means when it hits that price, that alert will go off, and for me, it'll send you to my phone and also come up on your desktop. So again, if you guys want to write this down real quick, that was the 105 option for July. Yep. July 105. To do one more in here, just because we're at the end of our class. It's hard. It's going so fast. What do you guys feel that you like for the best? Do you like D for a put trade, or Z for a put trade? Skip says P, and Scott says put below the move. Scott, that is on PXD, correct? So I'm seeing you guys all like PXD, it's bearish move. Let's go in here and look at PXD's option. Then we may have to go to a different trade. What trade here? What are you guys thinking? A June option or a July? Now I want to hear what you guys think before I say what I feel. Scott says at least June, depending on the open interest and the delta. Okay, that's kind of what I was feeling as well. A June option, because it's hard to say what's going to happen with this stock. So let's check out PXD for June. Okay, now this was an issue we definitely could run into. Your 150 put for June is 350 by 380. That's a 30-cent spread. That's a little bit bigger spread for me, but I think I'd still feel comfortable doing it. And you have a 1,200 open interest on the stock. So that's still a good open interest. What do you guys feel? Do you feel comfortable with this option, or do you want to go out to July? I see. Let's go out to July and check those. Oh, it turns out they don't have July. Their next one's September. This has come up in some, and it's just how they're writing the options. So what do you guys want to do? Do you guys feel that we should stick with June, or do you guys want to go all the way out to September, but most likely end up selling it before September? Okay, Judy says June, but then Scott says, well, how much is September, just to compare? So let's check September. Oh, okay. So this is definitely a higher priced stock you're going to be paying. And look at, though, the same option out in September is 810 by 890 and a 447 open interest. Yeah, it's got an okay open interest, but that spread's pretty big for an $8 option. Scott says, I'd go with a June and try to get a better price in the spread. I agree. And I'd go with the June, but personally, I wouldn't try and fight the spread only because it's 30 cents. And I've missed trades off these entries in order to try and get in the spread, and then you've completely missed it. And if you would have just done a market, you would have been okay. So with this one, why don't we go through and set another contingent for PXD, because this one definitely looked a little better for a bearish stock. So in Options Express, you're just going to go up here, click on Trade and Contingent. So this was PXD, and this was the June 150 put. You can check it over here, make sure that's 350 by 380. So we want to buy to open 10 contracts at market, and our price would be on PXD last below there's your 100 moving average, but I think we'd want a little below it. I'd say here about 155.39. What do you guys think? Yeah, and Diane's totally correct on that option. She said it is after hours, spreads may tighten. That's correct. I've definitely seen it happen. So I see some yeses for that price. So we'll go through at 155.39. So that way, and the way I call it, it's got to be like committed to that price so that we know to get in. And again, I'm going to do this between 10 and 4 so we can't get filled on a gap. So let's just go through and check everything here. We got the June 150 put. Okay, I like that. Place order. Order has already been submitted. Okay, cool. So now we've got our 2 contingents set for Apple and PXD, and we have an alert set for Disney. How do you guys feel about looking at those stocks and setting those up and picking those entries? Scott says, I think I can do it. I see a couple looks good to me, like it. Judy says, good. Thanks for explaining this clearly. Yes, and I'm glad that I can help you guys and help you learn more. So as we are finishing up here, hold on. Just bear with me for a moment. I'm glad you guys are definitely learning a lot from it and are able to use these. And I will end up be posting out on our Facebook and our website about the exits for that I'm going to choose for these 3 trades. So that way you guys, if you're setting them up, aren't going, okay, you only gave us the entry, what about the exit? So let's see here. We have set up a trade. And how do you guys feel about this trade? And you guys have all said it sounds good. Thanks for explaining it. So what happens now? Well, it'll be posted on our website and our Facebook, just so you guys know, because I don't want to leave you guys hanging with, well, he set it up, and then you never hear about it again. I don't want to do that to you guys. So quickly, we're just going to go over some Your Market, My Report news. We've been working on many new things. We now have our new monthly, more in-depth S&P overview that's posted on our website once a month. This will be starting the end of this month. That will be at the end. It's going to be more in-depth, more than what our commentary does. And we now have an email list that includes things you don't hear anywhere else. In order to find out, you got to join the list. And there's more coming each month. So thank you, but don't leave yet. I appreciate you coming and spending time to learn more about trading. And remember that we do a free online class once each month, because who does not love free? And then please, please, please fill out this short survey that's going to pop up after the class. I'd really appreciate it if you guys can do that. It'll help me out a ton. And I just want to thank you guys for coming and have a great night. Don't forget to fill out the survey. Thank you, everybody.